Every Monday to Friday, this is Peter Lewis's Money Talk. Money Talk.
Good morning. This is indeed Peter Lewis. We're almost at the end of the week and the end of the month. A warm welcome to Money Talk for Thursday, the 30th of May. And this podcast is sponsored by Surfing Group, which is headquartered in Singapore and offers online financial services to 30 million customers across 10 countries. In today's business and finance headlines, the IMF has upgraded its 2024 forecast for China's economic growth, but warned that Beijing needed to scale back industrial policies that could affect trading partners and also increase efforts to lift domestic demand. China's economic growth is projected to remain resilient at 5% in 2024 and slow to 4.5% in 2025, the IMF said in a press release. The fund had initially projected 4.6% expansion this year and 4.1% in 2025, adding that it welcomes steps in recent weeks to boost the property market. Australia has suffered a setback in its fight against inflation after April's consumer price index rose more than expected. Australia's weighted CPI rose 3.6% year-on-year in April, greater than the 3.4% gain forecast in a Reuters poll. The reading was also higher than the 3.5% reported for March. It was the highest level, in fact, since last November. Inflation remains outside the Reserve Bank of Australia's target range of 2 to 3%. Mining giant BHP has pulled out of its planned takeover of rival Anglo American after the UK-listed miner rejected BHP's call to extend takeover talks. It said the Australian miner had failed to address its concerns over the highly complex and unattractive structure of a proposed deal. The offer valued the company at $49.2 billion, and an acquisition would have reshaped the mining industry. Money managers are piling into exchange-traded funds tracking Chinese stocks after recent government-backed measures boosted market sentiment. China recorded the largest inflows across emerging market countries for the week ended May the 24th, totaling $610.3 million. The change in sentiment comes after Beijing announced measures to rescue the property sector and support the economy. On today's programme, I am joined by Andrew Freris, the CEO of Ecognosis Advisory, and Frederick, Managing Director at Magnum Research. With a view from Taiwan is Ross Feingold, Director of Research at Caerus Consulting in Taipei. And my website is at peterlewismoneytalk.substack.com, and there you'll find my Asian newsletter, updated every weekday with the latest business, finance and economic news from across Asia, and you can also post any questions or comments there.
Peter Lewis's Money Talk.
US stocks sank on Thursday as a global bond sell-off accelerated. 10-year yields in the US, UK, Eurozone, Japan and Australia all moved sharply higher yesterday. The equity and bond market moves came after the release of strong US consumer confidence data on Tuesday, which lowered expectations of interest rate cuts in the near future. Higher than expected Australian inflation overnight also pushed longer-dated global bond yields higher, and data published on Wednesday showed German inflation picked up more than forecast to a 4-month high, all of which eventually proved a headwind to equities. US stocks closed near the lows of the session. The Dow fell 411 points, or 1.1% to 38,442. The S&P 500 dipped 0.7% to 5,267. All 11 sectors that comprise the broad S&P 500 retreated, and more than 440 stocks in the index were lower on the day. The Nasdaq Composite outperformed, helped by shares of Nvidia. The tech-heavy index slipped 0.6% from its record high reached the previous day to 16,921. Nvidia climbed 0.8% to another record high, reversing an early loss of 2.6% and taking its market cap now to $2.82 trillion. The AI favourite has risen every trading session since issuing its blockbuster earnings report last Wednesday, and since then the stock has surged around 21%. A series of US Treasury auctions received a lukewarm reception from investors, sending yields sharply higher. The 10-year Treasury yield rose 7 basis points to 4.61%, having hit a peak of 4.64% earlier in the day. That's its highest level since early May. The US dollar index rose 0.5% on Wednesday. The Japanese yen depreciated 0.4% to 157.69 yen per dollar, hitting its lowest levels in 4 weeks. The onshore yuan fell 0.1% to 7.2489 against the US dollar. That's its lowest since November. Commodities came under pressure from the stronger dollar. Brent crude oil settled 1.4% lower at $83.43 a barrel. Gold ended 1% lower at $2,337 an ounce. Hong Kong equities fell on Wednesday, dragged lower by a decline in mainland Chinese technology and property companies listed in the city. The Hang Seng Index dropped 344 points, or 1.8%, to a three-week low of 18,477. The Hang Seng Tech Index shed 2.3%, and that takes its declines from this month's high to more than 8% and puts it close to entering a technical correction, which is a decline of 10% or more. The Hang Seng Mainland Properties Index lost 2%. Mainland shares outperformed as the IMF upgraded China's growth forecast for this year to 5% from 4.6%. In addition, two more Chinese cities, Shenzhen and Guangzhou, announced property support measures. The Shanghai Composite was up 0.1% at 3,111. Futures markets pointing to a decline of about 0.2% for the Hang Seng at the open should start trading around 18,440. And you can get the latest details on the market movements in my daily newsletter, which you'll find at peterlewismoneytalk.substack.com.
Every Monday to Friday, this is Peter Lewis's Money Talk. Peter Lewis's Money Talk.
It's a Thursday morning. That means we have Andrew Freris with us, the CEO of Ecognosis Advisory. Morning, Andrew.
Oh, that's the first part of bad news. Okay.
Well, that is a good morning. And also with us we have Frederick Chu, who's Managing Director at Magnum Research. Morning to you, Frederick.
Good morning, gentlemen.
Now, the IMF has upgraded its 2024 forecast for China's economic growth. It cited recent policy moves by Beijing to boost its struggling economy as helping, but warned that Beijing needed to scale back industrial policies that could affect trading partners and also increase efforts to lift domestic demand. It said growth is projected to remain resilient at 5% this year and slow to 4.5% in 2025. The change was driven by stronger first quarter growth and recent policy initiatives, the IMF said, as Beijing has eased monetary policy and stepped up programs to mitigate a deep property slump. The fund had initially projected 4.6% expansion this year and 4.1% in 2025. And it said it welcomes steps to boost the property market. The ongoing housing market correction, which is necessary for steering the sector towards a more sustainable path, should continue, it said. And the IMF also said in its statement that key priorities for China should include rebalancing the economy towards consumption by strengthening the social safety nets and liberalising the services sector to enable it to boost growth potential and create jobs. So, Andrew, there we have it. That's what the IMF is saying. I'm not sure if they're saying anything new here, are they? Or are they just catching up with what we've been thinking for a while, or is there something new here?
No, absolutely nothing new. What continues to concern me, and I have written a little bit about that, is the obsession of Chinese excess capacity, because it's a completely meaningless statement. All it says is that they're producing at present below their full capacity, and they're doing this in order to export more. You know, the whole thing, it is a circular reasoning. Are the Chinese exporting more? The answer is in inverted commas, yes. Why they're exporting more? Because they have excess capacity. And why they have excess capacity is because they want to export more. So the whole thing doesn't make any sense at all. Now, the fact that certain classes of goods, particularly EVs, are impacting certain particular sectors in EU and later on in United States, where the imports of EU from China are something like 4% of total imports of EU. So for all intents and purposes, China is not a major player in the importation of EUs in the United States. That has become an obsession, particularly with the European Union. And they have every right to do this. But from that to extrapolate that China is being driven by purposefully the government encouraging more investment on the industrial sector and therefore creating more excess capacity. And the more excess capacity there is, the more the Chinese will export. Sorry, that just fails, at least fails for me to understand the secularity of that particular concept.
Isn't it true that actually that's how trade works, isn't it? When you have excess capacity, you export it. Countries all over the world are doing that. They have excess capacity in certain sectors, maybe different sectors depending on the country, and as a result, that ends up as exports.
Please, I'll stop now. Please, Peter, let's not call it excess capacity. Simply they export. I mean, it's completely absurd. You can do two things with what you have. You can sell it domestically, or you can export, or a combination of both. The fact that you're exporting more does not mean that you don't have enough business at home to do this. It simply means that you find quite a lot of business overseas. You know, these are so simplistic stuff that for the European Union and the IMF to be reduced to the point of saying, if you cannot sell at home and you can sell in overseas, you must have excess capacity. Nonsense.
Well, let's bring Frederick in. Frederick, what do you make of this? First of all, this argument about excess capacity and what the IMF is saying here.
Yeah, I think if you look at the performance of the various sectors in China, industrial sectors, you will see it's pretty scattered at the moment. We have, spending on products like EV has been, quite stale at the moment, whereas the EV producers also has been struggling on pricing, struggling on selling. The competition is becoming more and more feasible, and also home buyers is not really picking up into buying houses. So the real estate is still in a problem, even though the central government has announced some sort of stimulation policies. But on the flip side, the export is growing. We've seen that the government has been supporting manufacturing sector. Travel is still at high demand. People has been increasingly or willingly to travel during holidays. All sort of that. So it's in a mixed economy situation. So I think it's really coming up with what the central government is currently quite, I think conservative into injecting more liquidity into the market. But I think when I see the projection from IMF, I think it's pretty neutral, even though you can say this is nothing new, but I think it's pretty neutral. I think
they've matched actually China's growth target now, aren't they? So they're saying 5%, yeah. China wants 5%.
Yeah, so it's pretty, I think it's pretty friendly in giving us such a report. I think for China itself, probably the biggest concern at the moment is whether to drag down, on spending, on homes, on luxury products, on EV, etc. It's going to drag down the overall consumption as is reflected in the retail sales for last month. That's one thing from my perspective. And second thing is when the export keeps coming up, keeps growing, it's probably going to trigger more of the challenges from US and EU on your excess capacity or whatever. So that's going to it's possible that we're going to see more political headwinds.
Let me ask you both about something specific that the IMF said in its statement. It says China's use of industrial policies to support priority sectors can lead to a misallocation of domestic resources and potentially affect trading partners. Now, is there some truth in that when, the government or the centre really directs where resources are going rather than letting the markets do it, you do tend to end up with a misallocation of resources? I mean, that's how the property sector bubble occurred in the first place, wasn't it? There was too much allocation to the property sector directed by the government. So is there some truth here in what the IMF is saying? And if so, what should be done about it?
Well, it's a state-planned economy. First of all, it's not a like a capitalism market economy. And even though it's a capitalism market economy, the government will somehow encourage more on some sectors where it fits with the state interest or fits with the overall economic interests of the country. I don't see a particular problem with that. As you can see, the growth in the past 2-3 decades in China, apart from real estate, technology is also one of the major areas that boost the economy. And without the support from the central government, that just basically couldn't be done.
Well, yeah, I would say that the IMF should also turn to United States and criticize heavily the Inflation Reduction Act and the CHIPS Act, all of which is pushing trillions of US dollars, into the expansion of the domestic chips production, not only as an aspect of, let's call it national security, but also as part of industrial policy. The same thing with the European Union, which also subsidizes heavily its agricultural sector. Everybody's doing this. Mm. So to turn to China and says, but you're using your industrial policy to do something or another as far as growth is concerned, is again, I'm sorry, I'm being very rude. It is so nonsensical. As an ex-professor of economics, I will give the poor IMF a fail simply in definitional aspects. Do you mean part of their economic policy is industrial policy? You bet it is.
When they say misallocation of domestic resources, the question that springs to my mind is, well, whose resources are they, these domestic resources? Well, presumably they are the resources of all these households with high savings. It's their resources, isn't it, that's being misallocated. So really, it's not really trading partners that should be upset. It should be households who are seeing their savings not used, not put to proper use, which is why they don't want to spend any more and consume any more at the moment. Isn't that really the issue?
Absolutely, and it also raises, I'm sorry, I keep going back to the States. It's not that I am pro-States against Chinese or pro-Chinese against United States, because they're two similar examples. As the fiscal deficit of the United States is increasing, and it's likely to increase sharply, you could say exactly the same. Who's paying for all that? It says all the, in inverted commas, poor people, including China, incidentally, that are holding U.S. government bonds. Is that a misallocation of resources? The truth is, I have no idea, because if it is misallocation because it's not the market which is allocating it, well, the market also in the States. Let's go back to the year 2008, when the subprime mortgages absolutely collapsed the property sector. So it's the United States also had a lot to answer as far as the property boom bust is concerned, as did China. So in other words, you continuously open up the leaves of the book that says comparative policies, and you find out that the United States has not been doing too badly, I'm being sarcastic here, in relationship to misallocation, as has indeed the Chinese government. So let's stop also about misallocation of resources. Things invested, and sometimes they work, sometimes they don't.
Yeah, I want to say another example. It's in the service in the service sector that picking up quite substantially in China as we maintain the growth quite well. I mean, you look at the F&B industry, for instance. That's I'm not sure how you would call it a misallocation, whereas the servicing of this area it's quite attractive to locals and people from outside such as Hong Kong. I think it's somehow the prioritizing sectors, if you call them, is somehow driven by the market itself rather than just a pure supply from the top down.
Okay. Well, look, we've spoken enough about the IMF. Let's talk about some other things. I want to talk about global inflation, global growth with you. We've had some inflation data out, first of all, in Australia, which indicated a little bit of a setback in the fight against inflation. Australia's weighted consumer price index rose 3.6% year on year. That was greater than 3.4% estimates. German inflation has risen to a 4-month high. The annual inflation rate there rose to 2.4%. But the harmonised rate, which compares it with the rest of the EU, went up to 2.8%, the highest in 4 months. We've also seen inflation expectations in the US rise along with consumer confidence, and that's had a big impact yesterday on bond yields around the world. US, UK, Eurozone, Australia, Japanese bond yields all rose sharply. Andrew, let me ask you about this jump that we're seeing in some of the inflation figures. Is it concerning, or are we just talking about, you've mentioned before, we're just talking about decimal places here. Are you seeing any signs of concern at all?
It is concerning only to the extent that it doesn't match central bank expectations, which, it is quite an important topic. But then to take that absolutely on its own and to say, 2.8% is worse than 2.4%, May 2.8, April 2.4, March 2.4 in the European Union, simply means that the inflation is higher than the 2% target of the European Union. Is that a good or a bad thing? Well, to the extent that this may stop cutting interest rates anytime soon, yes. To the extent of why 2% and why not 1%, or for that matter 0% or 3%, nobody has explained. But absolutely nobody. Okay, I have no idea how I would be able to defend that. That's why I look at that, and of course it is important for, in inverted commas, for the market, but trying to understand it macroeconomically still leaves me completely puzzled. And we're going to have exactly the same, of course, with the Fed. I'm really looking forward. Come Christmas, we will still be tormenting ourselves that it snakes around a 3-point something and it doesn't go below that, so that the Fed can, at long last, cut interest rates.
Frederick, what are your thoughts on this? Anything concerning here at all? I mean, I suppose what it's sort of saying is that the sharp decline in inflation, which we've seen sort of last year, has come to an end, hasn't it? It seems to be sticky, and it seems to be sticking above most central banks' targets.
Yeah, it has been quite sticky in terms of the numbers that we see, even though, the upcoming PCE, April PCE this week, which is tomorrow, is expected to come down a little bit. And if you look at the Michigan inflation expectation last couple of days, it's also been sticky. Seems to be remaining at the same level without too much of changes. I think that obviously caused the Fed to be more conservative into a very clear roadmap on the rate cut, which I think the market should not be expecting this to happen too soon or too quick or too aggressively. So I think the stock market, especially the stock market in Hong Kong, also been pricing in on such. From investors' perspective, I don't think that there's still a dream of a quick rate cut coming up in the next couple of months. I think what is worth to look at also is on the GDP growth coming up for this week in the US. All we currently know has been remaining the same for the past several months, where we know the job market, it's strong, personal spending is strong, personal income it's rising, inflation is sticky. That really doesn't have any big changes for the past quarter, I think.
Well, there's two things from this I'd like to ask you both about. One is how the central banks react, and secondly, how the markets react to this. In Australia, the central bank there has been warning that it could raise rates. One bad data point, i.e. This week's one, and analysts are taking off the table any hope of a rate cut. If we get another one, people are talking about the Reserve Bank of Australia will have to raise rates. In the US, Neil Kashkari, the Minneapolis Federal Reserve president, was basically saying he wants to see several months now of good data before he will even consider raising rates. So, Andrew, we've been saying for a while, haven't we, here, that there's not going to be a rate cut this year in the US. But are central banks around the world, maybe with the exception of Japan, going to have to rethink?
Very much so. And incidentally, I'm not changing the subject. And amongst all this, I am sort of sniggering behind my clenched fists while they are bellyaching, potentially increasing interest rates because of increasing inflation, hello, good old little China is suffering from quite a strong bout of deflation. I'm not at all gloating about this, but my favorite index, 70 prices of newly built residential accommodation in 70 major cities. It's my absolutely favorite index, not because I wish ill to China, but because it is so indicative of the really sticky deflation in China. Okay, it has come down negatively for 24 months. For 2 years, it has been growing minus, and it has been coming down for nearly 3 years. Wow. Talk about deflation. Okay, the rest of them are worried about increasing in inflation. China has got a major problem with increasing in deflation. As for the rest of them, yeah, obviously the good old Federal Reserve governor has been reading my stuff, and he also said, Andrew Freris is absolutely right. We have interest rates till Christmas plus. I'm being facetious now, completely. Okay.
I look forward to seeing the Fed minutes that mention this, Andrew. So, Frederick, look, we know that China's not going to raise rates. Japan wants to, clearly, but is struggling to do so. But what about other central banks around the world, like Australia and New Zealand? They've both been quite hawkish. We've got some hawkish FOMC members there. Should we be thinking about maybe rate hikes?
I think a rate hike in anywhere else in the world, it's going to first look at what the Fed does. So I think it's a U.S.-led action, but I think any rate hikes or potential rate hikes this year is going to be very, very cautious. As we can see, China, it's in deflation, and it's almost in the need of further rate cuts, further liquidities. Japan, it's also struggling. Obviously, we don't see a projected growth or inflation to sustain in that particular country. EU is probably having the same problem with the inflation looking pretty well, and that gives ground to rate cuts for the EU.
The ECB is talking about rate cuts next week, aren't they? We had two of the governing council members basically saying the time has come to cut rates.
Yeah, that has been I think a long problem for EU that is difficult to drive up inflation. I think so. It seems like the EU is back to a very normal circumstance. So all in all, I think some of the major economy in the world is still struggling with high interest rate or high cost money environment. So I don't really believe in a rate cut. A rate hike can happen in some other of these G7 or G10 countries.
Andrew, what about the markets here? The markets have reacted to this, haven't they? We saw, we've seen the last couple of days, actually, a sell-off in Treasury bonds around the world. The 10-year Treasury rose 7 basis points in the US. We saw a big jump in German and UK bond yields, also Australia as well. Not being helped by these poor Treasury auctions in the US. We've had 3 of them in a row now, which I suppose raises questions about who's going to buy all this debt the US government has got to issue to finance its budget deficit.
That's I agree. Again, this is I'm afraid, Peter, this was not a question. This was a correct factual statement to which I can only say yes. But now I'm going to add a little twist to that, and that is within 24 hours we're going to find out what is the verdict in Trump's trial. If it is a guilty verdict, then we may have quite a big setback on the possibility that Trump is going to get elected. And that is primarily potentially good for the fiscal deficit. But that looks down November time. Okay, plus the fact that he will definitely be able to appeal. But we may begin to see what a victory for Biden or a victory for Trump might actually mean for the markets that so far has been thoroughly and utterly and completely neglected.
So if what you're saying there, if a Trump guilty verdict, which means he may not become president, is good for the fiscal deficit, in other words, it'll be more under control, presumably that's good certainly for bond markets and then hopefully for stock markets. Is that the logical extension of that?
It should be also, because the way that I've been reading the comments, this is my interpretation of what I hear and read, is that the corporate sector is far from rubbing their hands with glee of having Trump as a president and therefore more tax cuts. They are much more concerned, of the damage that all this could be done to international trade, and particularly United States trade. So it is potentially a likely loss by Trump could be quite bullish for the markets.
It's interesting because I've been trying to think of a way of how to link this Trump trial with the markets. I think you've just done that for me, and we'll have to look more closely now. What, Frederick,
Guess what? The world will completely ignore it, Peter. Oh, dear me.
We shall see. Well, thank you if you're right here. Frederick, what's your thoughts on what's going on in the bond markets, first of all? At the moment, we are seeing a bit of a sell-off at the moment, aren't we, in reaction to these sticky inflation numbers and also these poor US Treasury auctions?
Yeah, I think the reaction in the bond market, it's pretty much a contrast with an expectation, early expectation of a rate cut, which the market believes that if a rate cut cycle begins, then the bond market tends to be more outperforming the equity market. But I'm more concerned it's if this situation drags on this rate cut or no rate cut situation. It's going to put pressure on the equity market, whereas we can see in Asia Pac, it's clearly a very much of a fund flow driven market situation. It's for the past couple of months, whereas Hong Kong, Japan, India. It has been reshuffling in terms of foreign fund flows that are driving up and down on the stock market. So it's still within the same pool of money, and it's just whether they're looking for relatively lower value stocks from time to time. So it doesn't really drives up the overall investment appetite.
So is this what we're seeing in Hong Kong and China at the moment? Is that what it's down to? It's basically fund flows. I mentioned in the introduction that China's recorded the largest inflows across emerging market countries into ETFs in the week ending May the 24th. Is this a large driver of what's going on, these fund flows?
For China, I think it's more fundamental driven. But if you look at the fund flows into sort of like China stocks, it's all non-China A shares. It's offshore China stocks. The A shares, we don't see, honestly, any interest into institutional allocations into onshore China. Japan, Hong Kong. From my observation, when fund flows go out of Japan in April, the market drops. And the market drops in Japan, the market ups in Hong Kong. And for this month, so far, the situation is reversed, where the Nikkei has been quite resilient, and Hong Kong is becoming weakened. And same thing also applied to Nifty. When we see the Nifty for the past several weeks is also we see new highs in the past weeks. So I think it's tactical play, and any news coming out from onshore that drives market ups or downs, it's purely speculative at the moment.
Andrew, in the US, in US equities, we're seeing a bit of a bifurcated market at the moment, aren't we? Most things in the broader markets have been going down, reacting to really what the Fed may do in terms of whether or not it'll cut rates, these rising bond yields. We saw out of the S&P 500, 440 stocks lower. The exception seems to be anything to do with AI, and NVIDIA in particular. What we're seeing with this with NVIDIA, I don't know if we've seen something like this before, this dramatic earnings acceleration that the company is showing, and then the huge increase in valuation. It's added about $500 billion in just a couple of weeks, maybe less than 2 weeks. I mean, is this AI theme, can it really sort of keep the market going, sustain the market?
Equally, I have been inundated with articles about the competition that NVIDIA is, let's say, provoking, because the chips that are being used for AI effectively, I'm now talking totally outside my range of knowledge, and I'm simply mouthing things that I have read, that the NVIDIA miracle is based on chips that are primarily driving graphic cards that can be easily adapted and possibly reprogrammed into AI, whereas there is a whole range of smaller companies that are designing specifically AI chips, which apparently NVIDIA is not doing right now. So I have no idea whether this is, you're selling hot, fresh hamburgers, whereby in the neighborhood there is a great number of shops with big signs saying hot hamburgers for sale here as well. Okay, so I must admit I got a little bit concerned about that.
Frederick, this theme, this AI theme, what are your thoughts on it? I mean, the million-dollar question is how far can NVIDIA go, and whether it can sustain this dramatic growth, which in turn is supporting most of the US stock market.
I think the AI in applicable AIs are going to be a long-term trend. For instance, the artificial intelligence functions within personal computers, within softwares. The current adoption rate is probably at around 10%. In 5 years down the road, we're going to see about 40%, 50% of adoption. So I think the AI that can apply into some sort of daily necessities, it's going to be changing, the way that human lives at the broader sense. So I think this is something that we should expect. However, no technology is indispensable forever. Like you won't have a technology that goes for life, that no one can come up with something new to replace it. So as we can see, there's various new generation of technologies of mobile phones and in every aspect. So whether NVIDIA is going to sustain, I think that's subject to many variables. Whether it's technology, it's going to be obsolete, or to someone new come up to replace it, or how it's, for instance, how China is picking up on the chips technology that could come up to equally with the US.
Okay, well, thank you very much for your thoughts. Sadly, we've run out of time, but great to hear you both. That was Frederick Chu, who's Managing Director at Magnum Research, Andrew Freris, the CEO of Ecognosis Advisory.
Peter Lewis's Money Talk.
I'm joined now by Ross Feingold, who is Director of Research at Caerus Consulting in Taiwan. Morning, Ross.
Good morning.
Well, a very busy and dramatic week, really, isn't it, been for Taiwan, particularly since the election, the inauguration of William Lai just over a week ago. You have a lot of US lawmakers travelling to Taiwan this week. What have they been saying and doing?
Yeah, already 2 bipartisan delegations, and mostly they're talking about defense and strengthening U.S.-Taiwan relations, but a big focus has been on defense with both of these delegations. Michael McCaul, who's the chairman of the House Foreign Relations Committee, led the first delegation, and he came out and just said very directly Taiwan needs to spend more on its defense. Of course, there's a large backlog of some of the 20 billion, that's billion with a B, worth of weapons that Taiwan has already ordered from the United States. And with the U.S. industry trying to ramp up production for Ukraine's needs, it's hard to believe that the U.S. industry could accelerate any deliveries for Taiwan at this moment, even if Taiwan was willing to spend more money. But we do hear hear it from members of Congress that they do want Taiwan to spend more money.
Why are these members of Congress doing this? They know, don't they, or they must know, surely, this is controversial. It crosses a lot of China's red lines. They're doing it so soon after the inauguration, no chance for things to really settle down. Why are they doing this?
Well, members of Congress do what they want to do when it comes to foreign travel, especially during congressional recesses. The executive branch, the White House, really has no control over this. This came up with Taiwan and China when Nancy Pelosi, who was then the House Speaker, visited Taiwan in August of 2022. And China complained loudly about it. And the standard response is to say that members of Congress go where they want to go. And the executive branch really can't dictate. They could try to persuade. And when it comes to these visits to Taiwan, it certainly is a mystery whether or not the White House tries to persuade members of Congress not to go, although that would be very surprising if the White House was making that effort. At the moment, at least, we don't have any evidence or reason to believe that the White House is trying to stop this. So the White House, the executive branch, is respecting the legislative branch's prerogative to make these kinds of visits. And there is huge bipartisan support for Taiwan in Congress at the moment.
And how has China reacted to this? I know they've put out the standard strongly worded statements about crossing its red lines, interfering in its internal affairs and so on. Does China really care about this, or is it not really that bothered, or is it a big issue for China?
Well, they put on a big show of being bothered by visits of members of Congress, especially if it's a prominent member of Congress like the House Speaker. So they do put on a show of being very angry, being very opposed. The Foreign Ministry will issue an angry statement. We don't see too much direct action afterwards, though. I mean, one thing that China could certainly do is any of these congressmen, whether they're members of the House or the Senate, represent states that have a large export volume to China. I mean, certainly China could take economic retribution against some of those states. So that's always certainly a potential to watch. And also another way to look at that is do representatives from states that do have a large trade volume make these trips?
And William Lai, he's once again sort of tried to hold out an olive branch to China, hasn't he? He was saying they need to share responsibility for regional peace. He was saying this after these 2 days of war drills, what were known as punishment drills, against Taiwan for some of the statements he made. But doesn't seem much chance that China's going to accept that.
Well, as long as William Lai's government's position on the relationship between China and Taiwan is that they are separate entities and that his government doesn't support something called the 92 Consensus, under which both sides recognize that they're part of one China. They just disagree on whether it's the People's Republic of China or the Republic of China. As long as his government is not going to recognize that, and they're not going to be frank, then China is going to be very angry. They're not going to engage in any government-to-government talk. So William Lai could offer every olive branch imaginable, but if he's not going to agree to this so-called 92 Consensus, China's government is simply not going to engage in government-to-government contact.
So what happens in terms of these drills then? Are we going to see more of these on a regular basis?
I think so. There's always speculation that these drills are in response to certain actions, such as the inauguration last week in Taipei of William Lai, and then days later China engaged in large exercises, or when Nancy Pelosi visited shortly thereafter, China engaged in large exercises. But we also have to keep in mind that typically these exercises are planned long in advance, especially if they're involving more ships or more aircraft. More branches of the military acting together or combined arms kind of exercises. So a lot of planning goes into them, but I guess they always have pre-planned exercises that they could activate when the U.S. Or Taiwan takes an action that upsets China. So we do see these large-scale exercises with increasing frequency. And one thing to also keep in mind is the enormous stress that this puts on Taiwan's military. It puts stress on the personnel, on logistics, and on the equipment. Obviously, if you're flying more sorties of your aircraft, it puts more stress on the aircraft. And that's not a race that Taiwan could beat China in. China just has more people, more aircraft, more ships. So it does put an enormous amount of stress on Taiwan's military. And China's always watching for how Taiwan responds and what is the capabilities of Taiwan to respond to these large-scale exercises.
So is there strategy to slowly escalate what they're doing? And because, all the norms that we've seen in terms of China and Taiwan relations and how these things are conducted seem to be being breached at the moment. They seem to be stretching further and further. Is that really the aim, and just test how far, how much Taiwan can really resist this and try and sap what they say is its independence movement?
It's certainly one of China's strategies is to, again, exhaust Taiwan, and whether they could exhaust Taiwan's military by doing these large exercises. They could exhaust sectors of the economy when China imposes bans on the export of certain products from Taiwan to China. And we've seen several examples of that in the last few years, especially with agricultural products. So China, we like to say it has a toolbox. It has a toolbox of different options it could use against Taiwan. And another one that they've used many times before is to persuade one of the remaining countries that has formal diplomatic relations to drop those relations. And it wouldn't come as a surprise if there's another country over the second half of this year that makes that decision. There's some candidates like Guatemala and Haiti, for example. So China has the Taiwan toolbox, and there's a bunch of different tools inside that toolbox that China could use at any given time. And it puts enormous pressure on Taiwan.
Is there a red line here that if China crosses it, it could prompt the US to get involved?
Well, certainly there's always the speculation that if there's a military action, would the United States get involved? And there's different degrees of military action. The most obvious one would be to attack Taiwan proper, but other options would be to attack or try to take over one of the offshore islands that Taiwan still controls off the China coast, or in the South China Sea, where Taiwan does occupy a couple of islands that Taiwan claims are part of the Republic of China's territory. So there are different degrees of military action that China could take. And then we get into some real serious speculation, because we always kind of assume that the United States would respond if China attacks Taiwan proper. But what if it's one of the offshore islands or islands in the South China Sea? Would the United States respond or get involved more directly in defending Taiwan? That's purely speculative.
I mean, this seems to be, well, it is, isn't it? It's worse than what we saw when Taiwan was president. And I suppose she was quite cautious, wasn't she, in her language that she used towards China. Why is it worse under William Lai? He also doesn't accept the 92
William Lai
consensus,
emphasized,
but why
he
is it
emphasized
worse?
something. Yeah, he emphasized something in his inaugural address, which was a statement that Taiwan originally made, which is to say that they are not sovereign to each other. Taiwan is not sovereign or she would say the Republic of China is not under the sovereignty of the People's Republic of China, and vice versa. They're just separate entities. And although this is not a formal declaration of independence, it's kind of interpreted in China as saying that it is. And we're not saying anymore that we're part of one China. We're saying we're a different country. So William Lai reiterated that in his inaugural address, and it's probably going to be something that his government is going to repeat constantly. In Mandarin, they say "Hu Belishu," which again, it just means that we're not under each other's sovereignty. So it's like a declaration of independence by using other words than saying I'm making a declaration of independence. And clearly, it makes China very angry, because Taiwan is no longer saying that we're part of China.
Right. Okay. Understood. Now, what about this bill that's been passed in the legislature, which people say could curb the authority of William Lai? There's been a lot of protests against that, hasn't there? What's the situation there?
Yeah, so there were several different bills actually to amend various bits and pieces of different laws, but it would give the legislature more authority vis-a-vis the executive branch. And frankly, the authorities that the legislative branch was giving itself were authorities that legislatures or parliaments in other countries have, in other democracies that they typically have. One was investigative authority to try and not just vis-a-vis the executive branch, but also private industry as well. I mean, we see the United States Congress, different committees with oversight over different industries, for example, they're constantly conducting investigations. So Taiwan's parliament, the legislative yuan, wanted to give itself more investigative authority that it didn't previously have. They also created a criminal charge of contempt of the legislative yuan. Again, contempt of Congress is something that we have in the United States as well. They also want to require the president to come and deliver a State of the Nation address to the legislative yuan. Again, that's something that the head of government does in other countries, so it's not that unusual. The unusual part about that one, though, is they also gave themselves the right to question the president after the president gives the State of the Nation address. I think that one's a bit unusual and maybe is a bit of overreach by the opposition. But anyway, all these proposals have now been passed because the opposition parties can combine to form a majority, or in simple terms, they just have more people who are not from the Democratic Progressive Party in the parliament at the moment than are from William Lai's Democratic Progressive Party. So they were able to pass this. Now there's talk about using Taiwan's veto process and also taking this to Taiwan's constitutional court for interpretation as to whether or not these changes are constitutional or not. So it's still very much a work in progress whether or not the legislative yuan will actually acquire these powers.
But there is already a supervisory body, isn't there, in the legislative yuan that does have the power to investigate lawmakers and government officials. That's there already. Well, so why this?
Well, there's something. There's a fifth branch. Taiwan has 5 branches of government. So in addition to the judicial, executive, and legislative branch, there's also a branch that conducts examinations for civil servants. And there's a branch called the Control Yuan, which is kind of like an ombudsman. They can do investigations, but only of government officials, and they have very limited powers actually to do so. So although it exists as a separate branch of government, its powers are relatively weak. And again, it's understandable, in my opinion, that the legislature would want to give itself investigatory powers that other parliaments around the world already have.
But the KMT didn't seem that keen to do it when it had the majority in the legislative yuan.
Well, the interesting thing there is that the proposals for these various expansion of its authority are all things that the Democratic Progressive Party supported when they were in the minority and when it was a Chinese Nationalist Party president. So both parties have done some switching of positions depending on who controls the parliament and who controls the presidency. So all sides here kind of look bad, to be frank.
And why are people so upset about it? I mean, there's been protests, demonstrations outside Parliament. I've seen people say that this is like a parliamentary coup against democracy. Why are people so upset about it if this is something really that is perfectly normal?
Well, there were some estimates that there were 100,000 protesters in the street. I actually, in Taipei, I live nearby. I live a short walk from where the protests occur. I did not see 100,000 people in the street. So I think that was a bit of an exaggeration, but unfortunately, a lot of Western media bought into that and were repeating that claim. There were thousands of people protesting for sure. Those are just Democratic Progressive Party supporters, people who voted for William Lai. They think, as you said, it's kind of like a parliamentary coup. So it's no surprise that some supporters would come to the street and voice their opposition. That's just the nature of a democratic society.
Okay, well, thank you very much. Very interesting week in Taiwan. Thanks for that update, Ross. That's Ross Feingold, who is Director of Research at Caerus Consulting in Taiwan.
You're listening to Peter Lewis's Money Talk. Money Talk.
And thank you for listening to Money Talk this morning. Do please take a look at my newsletter at peterlewismoneytalk.substack.com for more information on developments during the Asian trading day. I'll be back tomorrow, and I'm going to be joined by Francis Lun, the CEO of GEO Securities, and Hong Kong-based macro strategist Patrick Bennett. With a view from Australia is Toby Lawson, CEO at Staten Partners. Have a great day.
Money Talk